In my mind, I'm gone to Carolina.
Greetings and welcome back to Fisher Wealth Management's Tips of the Week. I'm Rick Fisher, managing partner here at Fisher Wealth Management. And this week's tip is on, do we pay attention to current events, or do we pay attention to economic data? And when it comes to making investment decisions, my advice to you is data matters more. To traders, maybe these economic events can move markets one way or another for a very short period of time, but for investors, people who invest for long periods of time, which tend to be most of our clients and the people that win the most, the data matters more. So there's no shortage of events today to be concerned about, right? Whether it's what's going on with an Argentinian default, the Ebola virus here in America, the Palestinian conflict going on in Israel and Gaza, or Russia and the Ukraine, or some Portuguese bank that's getting ready to default. I mean, there's no shortage of data that's negative in our world that has moved financial markets as of today probably about 4 or 5% off of their peak that we hit late June of this year. So does that mean that we're getting ready to start another correction or another recession? And the short answer to that is no one knows for certain any more than you what financial markets or stock markets are going to do in a very short period of time. And these events can move it in a short period of time. Is this the time when we're going to get a correction of 10% or more? Maybe. You know, I always say that I'm glad I'm not a market timer. I think we've been overdue for a nice pullback of that number for the last 18 months. If I tried to time the market, I would have missed maybe a 25 or 30% return. So I'm glad I'm not in that camp. So do we pay attention to these events that can move it in short periods of time, or is it more important for you to pay attention to the economic data, which points to a different story? We just had a second quarter gross domestic product growth at north of 4%, the best in some time. We've had employment numbers north of 200,000 for several months now. That's actually, we've had the longest streak since 2006. So employment numbers are improving. Construction numbers are up 26% since 2011. So we've got the job market improving, we have gross domestic product improving, which is what we produce here as a nation. We have the housing sector improving. So we have the underpinnings of positive economic data here in the United States at least. And then we have had this nice pullback of 4 or 5% in financial markets. So which one's right? So who knows over a short period of time, but what I will tell you is that over time, the fundamentals matter more. So try to pay attention to what's going on economically, fundamentally, and that will help us drive you towards the most appropriate investment product and solution for you and your family. Once again, the stock market's not for everybody. It goes up and down, which certainly it means it goes down, but many people, many of you listening, many of our clients have enjoyed nice returns in equities over time. Once again, not all the time or every time, but over time. But be careful in your investment portfolios to pay closer attention to fundamentals than you do events. In the last 100, 200 years, there's always been events, but fundamentals typically have mattered much more. So that's it for this week's post. Pay attention to the fundamentals more so than the events. If you're not having this kind of conversation with your advisor of choice, we do welcome you to call us down here at Fisher Wealth Management. So thanks again for listening. Please stay tuned for more Fisher Wealth Management Tips of the Week.
Feel the moonshine, ain't it just like a friend of mine to hit me from behind?